Hey guys, Akil Stokes here. Welcome back to another edition of the Midweek Markup. In today's video, we're going to follow up on a trading idea that we looked at in the weekend video and talk a lot about FOMO, the fear of missing out, and how it destroys traders and how it does so really in a way that is death by 1,000 cuts. I know it sounds bad, but as someone who actually went through it, it really is. So before we get started, do me a favor, hit that like button and make sure you subscribe if you're new. We have some pretty cool announcements, some pretty cool things that are going to be happening in August, and I do not want you guys to miss out. So subscribe, hit that notification button so you don't miss the next video, and I hope you guys enjoy. This level of structure right here, right? Just like we talked about with crude, right? We'd expect from neckline broken to previous level of structure. Well, guess what we already did? Well, we already moved to that previous level of structure. So for me, that violates the head and shoulders. It says that, hey, it was a head and shoulders. It never came back and retested. If you were a breakout trader that trades the breakout of the neckline, boom, happy for you. If you're a more conservative trader waiting for a retest, guess what? Train never stopped. Train never stopped. So now you got to look for the next opportunity. Now there is another opportunity because at this level, right, if we draw a horizontal line out here, you can see that we did have a lower low, lower close. So technically this ends up being this violation of structure, right, making this a pullback. So what I'm looking for is, again, a retest of that neckline. I guess it still is a neckline or once neckline, and a pullback trade with a chance to trade it lower. Now, depending, right, this is a 4-hour chart. Depending on how this thing closes in an hour, and I'm not too confident that I'm going to have an opportunity to get involved, because before this hour ends, we've got CPI coming out, and I told you how I think that is going to be a mover in the market. However, the more I talk about it, the less it's going to move. So I'm going to maybe talk about it more. I don't know if I'm going to have the opportunity to get involved, right? For one of two reasons. One, maybe we violate that. Maybe we push up, we violate this level. Two, we push so far down that it inverts the risk reward, right? And again, and this is based off the type of trader I am. So the type of trader I am, right? I can't trade for the extension. If I can trade for the extension, it'll be a completely different story. So I've got to shoot for a retest of the lows, right? So we'll give you kind of a setup. Did I write this down? Yeah, setup here. So we're looking at a stop loss of about 60s, right? 62s, I believe. We're looking at a target down here. Very simple way to find out what a 1-to-1 would be, right? Take a Fibonacci retracement from your stop loss to your target, or your target to your stop loss, doesn't matter. And this middle point, this 50% level, that will tell you exactly where that 1-to-1 risk reward ratio is. That makes sense, guys? Here and here. That means if we do get a lower low, lower close, which is what I'm looking for, by the way, you probably can't see it here, but a little rising channel, right? No divergence with it though, but a little rising channel into structure, pretty decent move there. If we get a lower low, lower close above that level, I can enter the trade because I have a 1-to-1. If we do not, I can't because we don't have a 1-to-1. So this is the difficult part of trading. This is where FOMO comes into play a lot. Why? Because and so FOMO is the fear of missing out, right? And we talk about kind of some of the common mistakes that traders make, and we know that. Or let me list for me, guys. What do you think are some of the common trading mistakes that maybe you didn't make? Wink, wink. But other traders like you may have made. Of course, you guys wouldn't make these mistakes because you're perfectly perfect. What are some common mistakes that you made or you saw other traders make? I'll give you one. Moving stops back is a big one, right? You have a stop loss, price action pushes up. You're like, I should give it a little bit more breathing room, right? That's a big one. What's another one? You guys are so shamed. You're so ashamed. I don't want to kill to know my dirty little secrets. Buying instead of selling. I've done that before, yeah. probably not as common, but common. Entering too early, exiting too early, taking profits early. Yep. So entering too early is one of them. And the question is, why do people enter too early? Right? We always want to know, though, you can't fix a mistake until you know the why. Why do wrong account? Yeah. Why do people enter too early? Well, because they're afraid they're going to miss the move, right? Entering a direction for no reason. Yeah. Not following your rules. Yeah. Right. So this is one of the reasons people enter too early, where it's like, I'm looking at this and I'm like, oh man, like it's sucking into my risk reward, right? I'm a trader. I'm looking at it firstly up here, and I'm like, oh yeah, look at that. Oh, that I'll make this different color so you guys can actually see it. But I'm looking at this and I'm saying, you know what? Look at this risk reward, right? Hope I chose the right one. There we go. Boom. Beautiful risk reward, right? This is great. This is that 2-to-1, right? This was what we talked about yesterday, Rich. This is how that the Bollinger Band thing ends up being for the 50% mark, 2.3 to 1 on average. And the other one, I think it's like 3.2, which is pretty cool. But you see this risk reward. This is awesome, right? You have a lot of reward, a little bit of risk. And then all of a sudden the market keeps pushing down. You're like, you see that reward shrinking. You see that risk increasing. And all of a sudden you're like, I'm going to miss the trade. Either I'm going to miss the trade, or I'm going to have more at risk, or, oh, my profits are being taken away from me because they're your profits for some reason, right? That's another mistake, thinking they're your profits. And then you say, you know what? F it. I'm selling right now. Right? And then you do it, you sell. And then, you know, sometimes it works in your favor because that's how the markets are. Sometimes it goes straight down. You're like, yeah, I knew that was the right decision. And that ends up being the worst thing for you, because now you have more confidence in breaking your rules. You start ripping your rules up because you're like, I don't need these things. I'm better than my rules. I got intuition because I've been trading for a week. And then eventually you go broke even quicker because, you know, it will bite you in the butt eventually. But that's the worst case scenario, believe it or not, is that you break your rules and you get a positive result, because now you just think you can do bad stuff. Right? Like when a little kid gets away with doing something, you're like, wait a minute, I can steal and I don't get in trouble. I'm trying to keep stealing. Why wouldn't I? And then you steal and you go to jail, and then bad things happen to you in jail, right? Same thing in the market. You could argue which is worse, what happens to you in jail, what happens in the market, kind of the same thing. We won't get into too many details, but you lose stuff. Let's put it that way. Anyway, back to the chart. So worst case scenario is that, let's say the CPI report does come up in that was deep. That's funny too. Let's say the CPI report comes up, and now all of a sudden we get a move like this, where you get a move that doesn't give a higher high, higher close. Well, now all of a sudden you're in a trade that never met your rules. If your rules is that lower low, lower close, now you're in a trade, right? Your rules are never met. Now what do? Right? You're in a trade that didn't meet your rules. Most people will stay in it anyway. Right? Most people don't, you know, our rules are simple. If you ever find yourself in a trade that you're not supposed to be in, what do you do ASAP? You get out of there. You get out of there, right? You stole something, you didn't get caught. You had this idea like, maybe I shouldn't do this. You put it back before you get caught. You live to fight another day. Most people won't do that though. Most people will stay in it and like, oh, you know, let's see how this turns out, right? And then you're gambling, right? You're gambling. But it's hard. It's hard. And as traders, you know, this is what we have to deal with. We have to sit here and we have to kind of like stare this train that's coming in our face. That's the fear and all that fun stuff. We gotta sit there and stick to hold our ground. We gotta stick to our rules. And, you know, I think it's obviously it's easier for experienced traders because, you know, we've been doing this for a while, but for newer traders, it's extremely difficult because you're starting to understand that, hey, trading isn't like what I see on the internet, right? These great opportunities or good opportunities don't come all too often. So when they do, you don't want to miss them, which makes you want to take it even more. So for me, I've got to wait. We're going to wait another 52 minutes and we'll see what happens. I'm not too confident, but that's because I think that we are going to see some movement in the market. But you never know. The point is, I've rehearsed it. I know my stops. I know my entries. I know where price can go to, where I can still enter the trade. I know where price would go to where I have to cancel it. everything else is out of my hands, right? Do you guys see that? I've done all the, I told you guys we did a coffee break a couple weeks ago about trading books, and Pitbull is one of my favorite trading books. And one of the most important messages I took from the book Pitbull, aside from having confidence that he failed at money management, was the note he got from one of his trading mentors that said, like 95% of the work is done before you ever enter a trade, right? My work is done here. There is nothing else I need to do. I just have to wait, and it's if then. But when you can do your analysis and do your work beforehand, and makes it easier when you have a trading plan, because now you're just simply following the rules and checking the boxes. You just wait. You just wait. So we shall see. We had a good conversation on waiting for your entry reason, right? You guys remember that? About 27 minutes in. And we were talking about waiting for the 4 hour, which is about 17 minutes from now, as needed a reason for entry, lower low, lower close to get involved in this trade, but you got to be patient. Don't rush it. FOMO, all that fun stuff. Well, if a lower low, lower close is our entry reason, has the situation changed? Well, yeah, it's significantly different now, right? Like we no longer, we were trading below. Our concern was that we were going to push lower to invert our risk reward, invert my risk reward. Now we don't even have an entry candle. So again, put yourself back in the shoes of someone who made that mistake. The fear of missing out caused you to enter early. Now you're sitting back like, hey, maybe, and you got a decision to make. And we talked earlier about how most traders don't make the right decision. So still a valid trading opportunity. We just got to wait and see how things play out with this particular candle. And it's still maybe a trade that I get involved with to the downside if we can get that lower low, lower close at a positive level. So on that opportunity, again, we have 2 minutes until the dollar yen close. And looks like we're not going to get a lower low, lower close. Looks like, if anything, we're going to get a higher high, higher close. It's funny. I put out a tweet this morning that said, right? It said sometimes the best trade, or maybe I didn't put out a tweet. Maybe I just said this in my mind. I might have deleted it, but sometimes the best trade is no trade at all. And again, do not underestimate the power of avoiding a loser or avoiding a mistake. So I applaud you guys for your patience, for those who wanted to hop in and had enough patience to kind of wait for it and see it out. And hopefully it ends up being an educational experience of why you need to wait for the close, wait for your reason for entry, avoid the FOMO. Hopefully for you newer traders, you guys can see that, where it's like, wow, we watched this thing live from when it looked like, man, I'm going to miss out, to now like, thank God I missed out. It's so important, because again, what kills most traders, right? Trading is death by 1,000 cuts, right? Where's that from anyways? Is that Kill Bill? I always think Kill Bill when I hear that. I'm sure it's not. Death by 1,000 paper cuts, right? That's what trading is, right? I think, again, we talk about there's 3 categories of traders, right? There are the bad traders at the bottom. There you go, higher high, higher close. So the exact opposite signal, right? The bad traders at the bottom. Got to check pound yen real quick. Pause this lesson while I actually check some trading stuff. Pound yen, looking for a hold. Okay, nice hold at the lows. So pound yen, we did hold at previous structural lows here, so we can start looking for that reversal reason. But you have your traders at the bottom who are just, they fail, right? Probably about 50% of traders just fail right away, meaning like they come in and they just suck, they blow everything. They probably start with like $1 and they lose their dollar in the first hour and then they're done, right? Then you have your middle section, your boomer busters, right? This is your other, 40% maybe, right? And then this is where you have your successful traders, right? So your 10% up at the top, your 40% in the middle, your 50% is at the bottom, right? So you have a good group to 90 years that fail right away. Then you got your boomer busters, and this is like you're like mid-table right here, right? You're not quite, you make some slip ups, you can get relegated. You go on a good run, you can get promoted, right? One of those type of deals here. But the traders here, they typically the ones that fail and eventually get relegated, right? It doesn't happen right away like that bottom group. This is the group where it's death by 1,000 cuts, where it's like the slow bleed, right? Where you're just slowly, you're not blowing your account, you're not getting margin call, you're not doing super dumb stuff, but it's like that account is slowly getting smaller and smaller and smaller, and it kills you over time. And I've always said that I think this is the worst position for a trader to be in, because at least like if you fail right away, you probably know that this isn't for you, right? So you wasted maybe 3 months figuring 3 months and a lot of money figuring out that, hey, this isn't for me, right? This isn't for me. I should try something else, right? The ones in the middle that fail, right? Not only did you waste a lot of money, what else did you waste, right? You eventually blew your account, but you wasted something that's more important than money. Time. Because these are the people that they hang around for like 5-10 years trying to figure it out, and they go nowhere, right? They go nowhere, and you wasted 5 years. That's opportunity cost. Again, you can make, I love the Xbox guy story, the famous story of the guy that said, he wasn't willing to give up his Xbox time to become a trader. And people laugh and they're like, oh, that's stupid. How can you not give up video games if you want to trade? And like, well, at least he didn't waste his time, right? Apparently video games were a high priority to him. If he would have invested time in trading, he wouldn't have invested the right type of time because, he had to make room for his video games. So if he didn't fail right away, he would have been in that middle section. He wasn't willing to do enough to get promoted. So he just would have wasted a lot of time and probably died by 1,000 paper cuts, right? So at least he said, you know what? Boom, I'm just going to stop right now. This isn't for me. I'll find something else. Right? But, that death by 1,000 paper cuts, that is the small mistakes we make. All the ones you listed earlier, right? The moving stops, the early target taking, the entering trades in the wrong direction, wrong account, wrong pair, all that fun stuff, emotional, right? They don't seem like they hurt you until you look at it a year later and you're like, man, it killed me. And again, that was a turning point in my trading career. That's when I noticed it. I did a simple A/B test, right? I did a simple A/B test where I took my trading results and I took my shoulda, woulda, coulda trading results. Meaning like I had one column of what I actually did. I had another column of what I should have done. And I looked at the two and I said, oh crap, I should have been profitable. And then I discovered, well, why wasn't I profitable? Oh yeah, I didn't do that there. Oh, I didn't do that there. I didn't do that. I was making like 30 mistakes like a month. Like small mistakes, like taking stuff out a little bit early, right? Like tiny, tiny mistakes. I mean, then you add it up over the year and I'm like, man, like that destroyed me. Right? We talk about, right, compounding, how it's, essential to wealth creation and growing your trading account. I was doing the same thing, but with mistakes. So in a negative way. Is there a negative term for compounding? Decompounding, decomposing. My account was decomposing. How about that? Slowly just dying and breaking down. But I didn't notice it at the time because it was all small stuff. But that small stuff adds up. So yeah, doing like this is a win. If you're someone in here watching this live and you're like, Akil, I was about to do it, and then like my finger was on the trigger, and then you mentioned something and I felt guilty and I didn't do it. I'm like, I'm gonna wait. But deep down I was cursing at you because it was going away without us. If you avoided this, hats off. Hopefully this is a valuable lesson that will pay forward for years to come. But this was something I used to do a lot. FOMO. So, all right, let's go back to the chats.